Thank you, Emilio. Can everybody hear me? Yeah. Thank you, guys. Yeah, it's a pleasure to be here today in Brussels. My first time in Brussels, and it's a really good occasion for Brussels Blockchain Week. So I work for BeInCrypto. BeInCrypto is one of the 3 biggest Web3 media in the world. We cover crypto, NFT, metaverse, and AI news in 14 languages. And yeah, so it's a pleasure to be here with you guys today. Do you want to take a few seconds to tell us more about what you do, or should we dive into the question?
I think it was already a nice introduction, but I can tell more about Revolut. So I'm working as a EU Government Affairs Manager at Revolut. We're a global financial super app with more than 30 million customers worldwide, and 20 million of them are based in Europe. We're offering limited crypto asset services such as selling, buying, withdrawals, and staking. Before that, I was working for FTI Consulting, the consultancy that is actually being a partner to Brussels Blockchain Week. And before the war in Ukraine, I was working at the Central Bank of Ukraine. I think the hugest achievement was the launch of the regulatory sandbox for financial service players.
Awesome.
Thank you very much. Yes, and thank you for that very warm welcome. And maybe a bit about Galaxy. Galaxy is, as you said, a US firm. We have a global presence, and we focus solely on the institutional, the B2B model within crypto. The best way to kind of, I think about it is we are very much a sort of a traditional financial intermediary in makeup and the way we think about everything, but we all of our commercial business lines are anchored into Web3 and the crypto economy. So from trading to borrowing, lending to mining to deployment of Web3 strategies, staking, and traditional asset management.
Super, thank you. Good morning, everyone. Bonjour, hola, bon dia. My name is Marc. I work with a company called ZOff. Anything I tell you right now can't beat the very warm introduction I was given earlier. So just a few words on ZOff. We are a crypto asset service firm licensed out of Switzerland. We provide on-off ramp services for crypto fiat, fiat crypto, as well as institutional services, which we've begun with an active managed certificate that gives exposure to fiat holders who don't want to take possession of the underlying asset, which in the first instance is Bitcoin. And yes, I've done a fair amount of regulatory work in my time as well.
Thank you, guys. So we're here to talk about blockchain-based finance and what you can learn from traditional finance. So first, what are the key challenges that blockchain finance faces in terms of regulation at the moment? Who wants to start?
I think I can answer this question. I think it's the lack of regulation. This is the hugest challenge that we're facing. I think just because there's no regulation about DeFi space, I'm not talking about Web3 and blockchain technology itself, it's perceived per se as being a risky technology or a risky space. For instance, in the recent draft EBA guidelines for AML CFT risks for crypto as a service providers, if it says that it should be assessed as the high risk if it's a decentralized application or, for instance, an hosted wallet application. So just because I think there's lack of clarity around this technology, lack of regulation, it creates challenges. For regulated actors like us, I think it's also difficult to then interact with this space because it's difficult to assess the risk. We're afraid that a regulator will come the next day with a request for information and ask, what are you doing with, I don't know, for instance, DeFi lending. So yeah, I think the answer is lack of it. This is the key challenge.
That's you.
Yeah, I think that's very accurate. I think more specifically, I think there's a lack of kind of interpretive precedents that you have in the space. So when you have, to the point that when you are a traditional financial institution and you're looking to move into the space, generally you'll take small steps and you'll try a bit here and try and look at there and how can the technology improve processes and systems, which makes an awful lot of sense. But regulators previously have struggled with the genuine idea of technology neutral. A lot of regulators have historically said we are technologically agnostic. If the activity is the same, then we regulate the activity and the outcome, and outcomes need to be the same. And I think now we are in a place where the vast majority of regulators, certainly in the EMEA region, are comfortable broadly with genuine technology, neutrality. Now, how they will interpret that, if you go and say, well, I've stuck a DLT into this traditional banking system, how that will actually be interpreted, that still needs to play out. But I think the biggest kind of issue that we're going to start seeing is a pivot towards ideology neutrality. So, regulators are, by definition, collections of human beings as well, and they are given rule sets and frame sets, and everyone is desperately trying to draft good policy and move in the right direction. But ultimately interpretation in the first instance will be heavily swayed by the ideology of the person making that initial judgment. And I think sometimes now when we move away from DLT, tokenization, and kind of the technological impacts of traditional finance and into crypto and crypto assets and tokens and DeFi and what, the economic benefit that might be able to bring, I think that ideological barrier is something that people are going to have to get comfortable negotiating around the table.
Interesting.
And I think I agree with both of your points, and just to build on that, I think something that we don't talk about openly enough in the Web3 industry is that some of the basic business fundamentals and some of the basic legal fundamentals are still missing in this industry. Those fundamentals shouldn't just fall away because we're Web3, because we're crypto, because we're blockchain. And what I mean by that is, if you look at the basic business fundamentals, 101 business school, what is the utility of what's being built beyond pure speculation? So I think one of the big challenges we have is articulating that utility, or maybe even identifying that utility to ourselves as some of the practitioners in this space. If we can't identify the true utility beyond speculation, how on earth are we going to communicate what the business model is or what the business utility is to the regulators who have spent decades building regulatory frameworks based on consumer protection, market integrity, and a degree of fundamental balance sheet protection as well? And then the same is true on legal fundamentals. It is necessary to have good, strong, robust KYC and AML. I'm sorry, but it is. Just because we're Web3, blockchain, crypto, call us whatever you will, and decentralized, it doesn't mean that our obligation to follow those basic fundamentals of business and legal requirements should naturally fall away. So I think one of the challenges that we have in the industry when we look at more mature industries such as technology and finance is that oftentimes in our excitement or in those moments of euphoria, we don't pay enough attention to those basic business fundamentals and the legal fundamentals.
I understand. So it's lacking regulation. We need it. So should we get inspired by traditional finance? So what should we import from it and what we should not? That's my two next questions. So what can we learn from traditional finance regulations and do differently with DeFi?
So I think we're already doing things a bit differently than we did it with traditional finance. And here I want to mention the points about creating this global vision of regulation, because right now with traditional financial services, we have a huge fragmentation across the globe. I think with Web3 space, with decentralized finance, it's finally the time to create approaches that are aligned worldwide. Also, I already see that there's more engagement on the industry side and there's more of an open dialogue with regulators. I think Web3 players already understood that it's very important to speak to policymakers before something happens and be proactive in creating the framework for themselves. And then I think the third point would be, I I think change in the mindset in terms of how we regulate, something that probably hasn't been done in traditional finance, but because we have this decentralization, I think it's very interesting to explore the ways of self-regulation or industry regulation principles as having industry-led standards or self-verification. I think something that would be applicable for Web3, decentralized finance, not necessarily for the traditional finance, but very interesting to explore. But I think the first point that I mentioned about the global alignment of a global regulation is something that we can learn that didn't work in traditional finance, something that I hope will work with decentralized and the Web3 space.
Yeah, I think this question kind of segues really nicely from what Marc was saying when, I think the biggest difference and the biggest things that the DeFi or the crypto world will need to understand is that regulation broader regulation encumbers a lot more than just AML KYC. So traditionally today, we do have some regulation within the space. We actually have some kind of a big encumbrance of regulation, some would say, but it is all anchored towards AML KYC. And actually, when you start opening up the full toolbox of regulation, you get into all sorts of other controls and prudential regulations, systems and controls, conflicts of interest. And I think a lot of what came to pass last year is kind of a shortfall in understanding within the crypto Web3 side. Everyone was concentrating on this one small part of what regulation and global regulatory frameworks are, and kind of missed all the obvious red flags now. And I think the important thing to understand and realize is that traditional financial regulation isn't just something that's been invented to be a pain. It is something that is iterated over decades to get to a place that is deemed kind of broadly socially accepted by everyone looking to interact within the space. Regulation exists primarily to protect people from other people. It doesn't exist to kind of defend people from inert financial instruments that, if left alone, will do absolutely nothing. People have to create products, sell products, potentially mis-sell products in certain instances. So this framework exists. Just because we move into a decentralized or a disintermediated world, it doesn't mean that it's not people still at some point conceiving the ideas and the frameworks that we move into. And so we need to have this adoptive stance towards regulation in order for us to truly benefit from what a decentralized world might mean. And I guess to the final point, regulation and the expression of regulatory solutions in firms needs to be driven by the individual business models of those firms. Like, no two banks are regulated in exactly the same way, which is why at large regulators, you have individuals sitting within those teams. Otherwise, it would just be a computer system that passes information and gives out a yes/no response at the end of it. There is an awful lot of gray area when large systemically important institutions come within the regulatory perimeter. And it's really, really important that we can't therefore be constantly looking for a one-size-fits-all solution for regulation in crypto. I think those kind of core building blocks need to be crystallized within the culture of crypto and Web3 and DeFi before we're going to kind of be able to move forward and reap the potential benefits.
And I'll build on that, Victor, because in my opinion, those actors in our industry who wish to be honest actors have plenty of pointers, have plenty of examples to draw on from within traditional finance, within technology markets, and they're regulatory constructs that have been developed over many decades. Now, some could argue that they're not entirely applicable to our industry. The phrase that I've often heard used is it's a little bit like trying to take a 10-pin bowling ball and force it down a hose pipe. It's just not going to work that well. But my opinion is we have many of those frameworks that already exist to draw on as examples. So if we want to be professional, honest actors, whether we are completely decentralized, centralized, or just operating on the periphery of Web3, there are many examples that we can follow and take up proactively of good practice. KYC and AML, of course, are well spoken about. But another example that we operate to very well in Switzerland is the segregation of client funds. So when client funds flow into our business at ZEDOF, we have a segregated client bank account if it comes in fiat. And for every crypto asset that we process, they go into segregated client wallets. They sit off balance sheet, so we don't commingle funds. And this is an example that the Swiss regulator has taken from traditional finance. But there are many other examples as well of good practice. So I would suggest that what we can learn from traditional finance and other well-established markets, even though we're young, and even though there is a lack of regulatory clarity in many areas, there are still constructs that we can proactively take on board, develop, and not have to wait for the regulators to come. And by deploying those best practices, benefiting from those years of learning, from those constructs that have stood the test of time, we can demonstrate that we are honest actors and be proactive instead of just waiting for regulation to come. Because just to talk to MiCA, the first draft of MiCA that I saw was in, I think, early 2018. And I don't think it's going to be in place until probably 2025. So if we're sitting there waiting for something as comprehensive as MiCA to show us how to act, we're going to be waiting forever. And as you all know, every 10 minutes in our industry is a heartbeat. We're probably the only industry in the world that can count the value of time, which is every 10 minutes, if you look at Bitcoin, is 1 Bitcoin. So if you're sitting for 4 or 5 years waiting for regulatory clarity from something such as MiCA, your business model is going to be tested. You're probably not going to be deploying best practices from a regulatory perspective. But if you can adopt and learn from what already exists, you're probably going to be in a good position.
Awesome. So not be as slow as traditional finance regulation. Well, you guys understood my next question because you already kind of touched on it. In your opinion, what are some elements of traditional finance regulation that could be beneficially applied to blockchain finance?
I agree with everything that's already said. Again, we touched base upon this point a bit. I think KYC rules, AML rules, but here I want to make one caveat about unhosted wallets. Because applying, for instance, consumer due diligence measures as they exist in traditional finance to unhosted wallets is not something that would be very favorable for the sector, because it's a bit different technology. And here we need to understand how it works, what the consumer wants in order to apply the rules to prevent the money laundering, the financing of terrorism, but still not put a burden on crypto asset service providers. So AML, KYC is something that can be applicable, of course. I think I will mention a point about consumer protection and disclosures, though I wouldn't say that in traditional finance everything works smoothly and perfectly. There is still lots of required information to be disclosed to a customer. Sometimes they're getting lost, but at least applying principles of having information disclosed in a very user-friendly way for them to understand the risks, the opportunities, the underlying technology. This is something that can be transferred from traditional finance sector to the blockchain-based finance. Very simply, if you say, for instance, you have decentralized exchange, why not applying the same principle and showing the economics behind a specific token, or highlighting whether there are any potential frauds involved in this token. So I think these two measures are probably the best examples that I could come up with when it comes to transferring some principles from traditional finance to blockchain-based finance.
Thank you.
Yeah, I think just carrying on from that is, you know, the biggest thing that is the spirit of regulation. A lot of engagement with regulatory and compliance processes in crypto deals with the, comes from the through the lens of because we have to, not because we should. And that's a pretty sweeping comment, and it's certainly not indicative of everyone kind of in the space, but a lot of solutions that come out there, view regulation as a barrier to entry, not as something that exists in order to provide a better economic outcome for everyone trying to use the system. And if you go and look at, everyone talks about kind of the spirit of Bitcoin, like why Bitcoin was born out of the last financial crisis, and everyone can talk very, very well about that and why it should be allowed to flourish. But then they become very, very short and don't want to talk about the spirit of why regulation also exists. And actually, if you go and look at the history of regulation and the history of Bitcoin, they kind of do interweave quite nicely. Generally, they're all promoting a better society for everyone to be able to come together in and not have to underwrite all their own due diligence, moving away from a sort of a caveat emptor style. Well, if that's kind of an analogy to a trustless based kind of world. If in a trustless based world, I trust that this is going to be mine and I'm going to get it because it is trustless. I don't have to do that. And in a regulatory world, because of regulation, you trust that the person providing you a service isn't going to do anything wrong. So there are some lines you can draw there, and really understanding why something exists in the first place, it is probably going to help a lot of people get over that initial hurdle.
Exactly. I mean, Bitcoin was created because people didn't stop trusting a system that was made with too much regulations. So that's why people in Web3 are surprised that now more regulation are.
Yeah. So on that point, exactly. Bitcoin came out of the financial crisis, so did MiFID II. So actually, these are two different. And all the other, the rest of the framework that came with MiFID II, and they were born out of the same frustration and the same problem. So they're kind of trying to solve the same solution. And so it sometimes is a bit frustrating that the two communities don't seem to get on. I think they do a much better job now, but again, it comes down to the ideological point. Like everyone feels like the other person is trying to eat their lunch, and that's not really where we are.
So, should we see and regulate DeFi only through the prism of traditional finance, or are there other ways to see it? You can start it.
I think there are many different other ways to see it. And it is my personal opinion that regulators are missing somewhat of a trick at the moment because they don't understand the technology through and through. They understand the potential implications and the risks of the technology, perhaps. But a point that I've been pushing for a very long time, and it's falling on deaf ears, and maybe it will fall on deaf ears with you guys as well, is that the way regulation seems to work, in my opinion, is it's always after the event. So when something has happened after a period of time, sometimes perhaps even years, if we talk about Wirecard as an example, the files get passed to the relevant authorities, the work starts on determining who was right, who was wrong, how to make it right, and the poor old consumer is sat there waiting for years and years, in some instances, to receive the protection that the regulators wish to provide and market participants would like to see, and the market itself suffers because some of the confidence in the market has been eroded, which is the exact opposite of what regulation is there to do. It's supposed to protect consumers, ensure market integrity, and provide a degree of balance sheet protection as well. 3 fundamental points, in my opinion. Regulators, therefore, at the moment are always acting after the event. And if they could understand that some aspects of blockchain technologies would put them at the epicenter of what's going on because the information is available, and think in a slightly more constructive way, a slightly more innovative way about how they themselves could innovate the entirety of the regulatory approach and look at prevention rather than chasing punitive channels many years after the event has happened. And I think blockchain technologies through the adoption of RegTech could be something that would be quite interesting to explore if indeed we could find a regulator that was sufficiently well educated, sufficiently willing to take a risk, But the flip side of that, to having a more efficient model, something that was more timely, is of course that we as industry practitioners might feel that's slightly intrusive. And I'll use the example just to finish on this particular point of a discussion I had with a particular tax regime somewhere not too far from here, but I won't name where for reasons of privacy and professionality, where the point was raised to me, Mark, we've got a great idea. We're going to build a pan-regional database of all the transactions that happen in the world of crypto so that we can then determine how we can appropriate tax payments more efficiently. I said, that's a fantastic idea. But the database you're talking about wanting to build kind of already exists if you just take a look. And that, in just a short anecdote, is one of the challenges that we're facing. I think from a regulatory perspective, those learnings about what this technology could do for regulators have not been fully grasped, perhaps because of education, or perhaps because we as an industry are just not doing a very good job at really explaining the power that this technology could provide to all market participants, not just the private sectors who are driven by profit.
Fascinating.
I think I just, because this might set you up quite nicely as well for what I think you were about to react at some point in there. I think the kind of the other side of that, I agree quite broadly that regulators are potentially behind the curve, and a lot of them are actually doing some really good work to get up the curve to understand the space. I'd also kind of argue that it's not necessarily their job to understand the space. It's their job to protect consumers and provide market integrity and within their perimeter. So actually the bigger question is, is this within the perimeter? Is this without the perimeter? But the interesting point you raised there, and I think about regulating in hindsight or delivering regulatory outcomes in hindsight, crypto is probably the biggest paradigm shift that we've seen in financial markets since potentially, I don't know, the electronification of markets, moving from pit-based trading to screen-based trading was a pretty big technology change, but regulators had a long run up to that. Now they're very much in remediation mode whilst trying to meet their objectives. And on that point, the lower barriers to entry into the space is a great thing for innovation, but it means that it's brought a lot of people in that have hitherto never operated within a regulated environment, don't necessarily have finance experience or banking experience. So the analogy, it's a very, very basic one, is generally when people before people get into a sports car, they learn to drive and they prove that they can drive a traditional, a small engine car and you don't generally go to someone who's never proven that they can handle a car and go and stick them behind a monstrous sports car, because they are probably going to do quite a lot of damage. And I think where regulators are kind of struggling, and to your point about technology and demonstrating the benefits of the technology, I think the right vehicle for that is actually people who can demonstrate that they can do the activity first and understand the activity of providing banking services, and then saying, right, and then look, we understand all the heuristics, we understand the framework, we have done this for a long time. Now trust us to be able to show you the benefits of interposing new technology into that, rather than having the double whammy with regulators. And so, and to the point you made earlier, the issue with that is all the firms that have that intrinsic experience of delivering within traditional regulated frameworks are too nervous to step into the space because of the lack of clarity. So you have this kind of negative flywheel where we need, once you have that institutional adoption, once institutions get in and start engaging with the technology and taking the regulators on that journey, then I think you'll have a huge step up in adoption.
That makes sense.
Yeah, I really like that you mentioned the point about supervisory technologies or regulatory technologies, because in my times at the National Bank of Ukraine, I was the one convincing people to go from Excel spreadsheets to AI or blockchain analytics. It was extremely difficult, I can tell, because people are used to what they see, what they believe in, and some of them, I think probably right now when we have ChatGPT, they believe more in AI, but 1K, they're like, no, AI can't do it. Like, we cannot track transactions and do monitoring with artificial intelligence and not that smart. And now we have real examples. So probably it's indeed showing the example, showing the demos, actually making them work with that technology that would help build, I think you're referring to this embedded supervision model when, for instance, like supervisor acting as one of the nodes, they're controlling the transactions, which would be super interesting, exciting to see. But it's a very long process, and I think, for them it's just to have an experience with this technology, bringing them to this space is something that we can do as an industry. And the last point I wanted to mention is about this bridge between finance and tech. And the point I really wanted to mention that sometimes there are regulators trying to regulate solely tech applications through financial services lens as, again, staking services, when, I don't know, some regulators are saying this is collective investment scheme. I've even heard repo transactions, but in fact, it's just participation in the system. So I think it should be a balance indeed between tech regulation and financial services regulation. And it's super important to not step into financial services regulation space, but it's actually just tech, just a technology, just the users using the software.
Thank you. Usually with traditional finance, each country has its own regulation, but blockchain suffers no borders. That's the essence of blockchain to be international. So what's your opinion on a global regulating system for blockchain-based finance?
I'll start that one. I think a lot of emphasis, I think, is put on the requirement for cross-border cooperation in order to get a handle on the global nature of crypto, digital assets, and blockchain markets. I think that a concern I sort of have is that too much weight is applied to that requirement, which is going to slow down the individual jurisdictional adoption of regulation of the space. Because I'm still kind of unconvinced in how well the global cooperation of traditional finance regulation sort of works. By a number of metrics, there's still an awful lot of terrorist financing and everything that happens within the traditional system, and also, the requirement that people and cross-border, there's language, there's technology issues, there's a desire to dedicate resources at different, there's different priorities across borders. It seems like a very, very large barrier to get across, and the more that we say, right, well, we'll understand the space once this happens, I don't think it's really ever going to happen. But where I think the industry can help is to start changing the narrative slightly from where I think it's been going in the past 18 months to 2 years, which is moving away from the potential for jurisdictions to take a piece of the market. If you go and adopt a regulatory framework, then that jurisdiction will gain economic benefit because it will have an influx of innovation, it create jobs, and this is all a very, very positive thing at the jurisdictional level. So it becomes a heavily political point, and generally regulators are not deeply intertwined with politics. That was a bifurcation that happened for a reason, and we seem to, as an industry, have gotten away from, well, what is the genuine economic good that crypto assets can provide? Decentralization, disintermediation, the reduction of rent seeking, all these positive societal benefits that can be brought through. That narrative seems to have fallen away slightly. And if you want to promote, cross-border interaction and cross-border cooperation, you need to start to get back to what is the genuine economic good of crypto versus the traditional system, rather than trying to, pin economic benefit in one jurisdiction, and then because that is a fight towards nickel and diming regulation.
So I think both you, Oleksandra, and Marc, kind of like already touched base on that. But do you think regulators can go as fast as the technology evolves?
I think just kind of briefly on that, it depends on the regulatory framework. So in the UK, for example, the FCA was sort of a pioneer of principles-based regulation, and that is a regulatory framework that concentrates on outcomes. And so if you have a lens through which that's being applied and whoever is making the judgment about those outcomes, then yes, it absolutely can, because you move away from outside of things like client assets and client money rules. You move away from discrete requirements that need to be met, which might be difficult to do so under a new sort of technological paradigm. Where you have a very strict rules-based system, of which there are many examples globally, you tend to get into an instance where, well, the rules need to change in order to allow innovation to happen. And we've already discussed that good regulation has iterated through various innovation cycles and through various crises. Regulation should not be deterministic on innovation. Regulation should exist to promote safe innovation. And I think that's, and so I think rules, we will see globally, safe innovation struggle in very heavy rule set-based regulatory environments, and will probably move towards and thrive under a principles-based regime where the regulator is in genuine good faith engaging in a technology and ideologically neutral manner.
I'll just jump in very quickly and say the regulator in the US seems to be moving pretty quick at the moment. So I think where they want to, regulators can move quickly. But I'm not sure it's entirely up to us to look to the regulators to move quickly. So there are examples of self-regulation or industry initiatives with FATF and the Open VASP initiative, where industry is coming together to try and solve some of these challenges about global trade. And that involves things such like the travel rule. How do we ensure that there is a messaging system whereby market participants and competitors can exchange information between themselves to follow the FATF recommendations? And that's something that the Open VASP network is working on, and we work very closely with those guys. So there are certain initiatives that allow us as the industry, with those relatively neutral bodies like FATF and Open VASP, to try and not always wait for the regulators. And I think that's important to note as well, because back to my point earlier, if we wait for regulation, just using MiCA as an example, a 5 or a 6 year incubation period is half the lifespan of our total industry year to date. So we might be waiting for a very long time only to be disappointed. And just on engagement, final point, because I know Oleksandra wants to come in, I just want to note that as an industry, we're very poor at engaging with regulators. If you look to the US, the top 5 tech companies in the US spent nearly $70 million on engagement, education, or if you want to call it crudely, lobbying. The entire blockchain industry only spent $22 million. So we're very, very bad as an industry at engaging with regulators, engaging with governments, providing evidence, delivering education, and to your point, taking them with us on that journey.
Actually, I wanted to comment on what Alex said about principle outcome-based regulations and very tight regulations, because honestly, I think it's super difficult to find the right balance. Sometimes with outcome and principle-based regulations, we see the lack of enforcement. There's a very painful issue for payment services providers. IBAN discrimination, very principle-based, banned but not enforced at all. And with innovation, I think it's still, even if you have principle-based approaches, it's still difficult to not to put any restrictions. For instance, we have right now AI Act that has been negotiated, and I think the negotiations change as everyone understands what OpenAI can do. It's extremely difficult for regulators to do this. What I think can be a solution is a space where players could innovate, a safe regulatory space. I'm talking here again about regulatory sandboxes, or at least environments where we can talk to regulators, say that, okay, this is the innovation. Probably it's not, there are some restrictions in this or this directive regulation, but this is something we want to try. We see the benefit for the consumers. Can you please let us try and then make changes? But then like the last point, it's also super difficult to make changes to regulations that are already in place. So I think new mechanisms should be introduced to make them fast. I think.
A quick question for you, Oleksandra. To what extent do you think we should mix traditional finance with blockchain-based finance?
We definitely should mix it. I think one sentence on this one, if a customer wants to deep dive into decentralized finance space, I think we should allow them to do it. If they want to use hosted wallets, to use the services, we should allow them to do it. Lending, staking, yes, I think it should be integrated.
Awesome.
I think just one really quick point on that is I think we've seen recently. Kind of my view is one that is going to be intermediated decentralization is probably going to be better than disintermediated centralization. So and these are two very distinct expressions of DeFi that we see now. DeFi generally is talking about decentralization, and we get into a lot of decentralization in name only, and kind of this idea of staking in name only. And really, these are just black boxes that are operating, completely, in the dark, and no one really understands what's going on. So I think we need to understand what we really want to achieve here.
Okay, fascinating, but we are running out of time. Maybe one last word. Where do you see regulation to be in 5 years in the sector? One word each.
Adoptive.
Should we end it on this?
Many regulations, and I feel sorry for all of us because that means chasing licenses, regulatory arbitrage, which was something that we are hoping we would avoid.
Can I say, like, in 50 years, no regulation at all? The market is self-regulated.
Awesome. Thank you, guys. Thank you to Brussels Blockchain Week, and it was a pleasure to share this conversation with you.